Jay Bala, Chief Market Technician at catchthechaos.com is now joining us on a phone line from London. Jay, what's your view? Markets would continue to go higher. We are up 1.7% at 7,730.
Yeah, when I had spoken to you a couple of weeks ago, we had said, this is a resumption of the uptrend, and the market is holding up well to that thesis. But what we are expecting at this point of time is we are expecting some sort of a deep correction that starts from somewhere around 77.50, give or take 20-30 points on either side. So, we are looking at, a deep correction somewhere around the ballpark of 7,300. Which will be an excellent buying opportunity. And we expect the next leg following that deep correction will be even more strong and much more thrustful and much more forceful than what we've seen from the lows of February 29th.
Right. The point that you made about, markets going back to 7,300, what's the probability for that? Is it a very high probability that markets may go till that level?
Yeah, corrections are always a bit difficult to gauge. We think the probability of that, we're definitely getting a pullback, but the deep correction that I'm anticipating could either be falling short or it could get deeper than what I'm anticipating. So it's always a gray area to trade the correction. But when it gets there, we'll know that the end is close. As it gets closer to 7,300. We'll get an idea, or if the market could surprise everyone and just go sideways and spend its time as a sideways correction rather than a price correction. So we could have anything, but this is just a thesis. But we got to hold on to it. But the higher time frame is that the next leg is going to be much more stronger than what we've seen from February 29th low.
Right. It will also be much more faster.
Yes, obviously that's a good point. Basically, if I were to get a bit technical, this will be the sharpest and the most powerful leg, and it will be much quicker. And if it took 1 month to reach 6825 to 7728, it's going to probably, that kind of level is going to come much quicker. So let's wait for the pullback to come through, and we want to see an overlapping price action. Once that happens, we'll be much more confident that our thesis is holding up well.
Right. How would you essentially look at, the banking sector? Because they have not performed, but it's been largely led by metals. Some of the other names, very select banks have done well. Earlier, it was banking which was taking the market higher. Any view on the banking sector?
Yeah, obviously, I've been positive on banks and said, Axis Bank is my top pick within the space. So far, I haven't yet seen the, sharp and quick movements, but they are holding up quite well. And the lows of February have very low probability of, breaking down. So that itself is a positive. So, I'm sure the banking index will reclaim 20,000 plus by the time, we are looking at Nifty to cross record high. So basically, we are looking at banking to work in tandem with the Nifty.
Right. Just a word on the pharma before we can wrap. How do you see the pharma sector? We had a lot of news flow on Lupin yesterday. Every pharma name corrected, but today most of them seem to be bouncing back.
Yeah, pharma is a very interesting space. I would say you should focus on second rung pharma rather than frontline names like Lupin and Sun Pharma. You should rather focus on Cadila and that sort of Dishman, that sort of name. I know you will probably be better off investing and from a risk reward perspective as well as returns perspective. I think these will take the lead and they'll outperform the bigger boys. So you should focus on second and pharma names. That's my opinion at this point of time.